Welcome to the Life Self-Mastery Podcast, where we bring in entrepreneurs who have created online businesses and improved their lifestyles. Here's your host, Rohit Malhotra.
Hi everyone, I'm Rohit from lifeselfmastery.com, and today I'm excited to have Jefferson Lilly, who's a mobile home park investment expert who co-founded Park Street Partners, which owns 24 mobile home parks coast to coast. He's also the host of Mobile Home Park Investors podcast with more than 10,000 downloads per month. He spent 7 years investing his own capital acquiring and operating mobile home parks, and he's the go-to person when it comes to mobile home park investing. Welcome to the show, Jefferson.
Hey, thanks for having me, Rohit. Great to be with you.
So awesome. I'm very interested to know, how did you get your start into mobile home investing, and why did you, look into investing in such a niche market?
Yeah, so it was part by plan and part dumb luck. About 12 or 13 years ago, I was looking to get out of the stock market and diversify into real estate. I've always been a big fan of Warren Buffett, the famed value investor. I'm not in his league, but I do try and emulate what he teaches. And among other things, that's to stay within your circle of competence. So I figured, I had always lived in a house or an apartment building. Why don't I just buy an apartment building? I don't mind working. I'll be happy to, invest some time, some money, fix up the roofs, fix up some kitchens. I wouldn't necessarily do the work myself, but, find folks to improve the property, make it better for tenants, bump the rents, make it better for me. That was the plan. And then just in researching multifamily properties, any of those search results would return, like 100 apartment buildings, maybe yielding an 8 cap rate, 8% unlevered return on your money. And then there'd be, one mobile home park yielding like 10%. And I just kind of thought, well, that's pretty absurd. I'm not going to buy a trailer park. So I kept doing a couple of searches. I kept getting hit over the head with these quirky little multifamily properties, 1 in 100, that were mobile home parks that yielded so much more money. So I began to look into it, and I realized it really is the best niche going for several reasons. We can certainly dig into that here on the show. But anyway, I was really looking to invest in apartment buildings and kind of stumbled upon mobile home parks as being better.
Okay, and can you talk about your first deal? How much money did you spend on your first deal?
It was a little less than $500,000 purchase, and I invested somewhere around $85,000 of my own money. So that was not a syndicated deal like I do them now. I frankly, gone beyond my own financial resources. But so that first deal, I just came up with my own capital and purchased the property. I was less than $500,000 purchase at the time.
Okay, so were you working in a full-time job when you started investing?
Yes, I was. So I was working in Silicon Valley at the time. I had worked collectively for 3 different startups over about a decade. And so, this was really kind of going to be diversify my net worth away from stock options and into real estate. So, I had my day job for about that first year that I got in real estate. And frankly, after about a year, I could see that my startup wasn't doing real well, but I could see that the mobile home park was doing pretty well, and I was putting almost no time or money into it. So after about a year, I moved over and started doing real estate full time. But at no point did I say, hey, this is so awesome, I'm going to just quit my job and give up these sexy stock options and go do mobile home parks. I kind of lived one foot in both worlds for about a year before transitioning.
Got it. And about your first deal, how was it? Far away from your home, and how many park lots were there in the first park that you bought?
Yeah, it was far away. It was in the Oklahoma City metro. I live out in San Francisco, so that's 1,500 miles away. and it had 66 pads, of which about 2/3, about 44, were occupied at the time. So obviously about 20 vacant pads. But again, cash flow then from those roughly 44 tenants. They all owned their own homes. So initially it was just really what I call a parking lot deal. I was just collecting rents into the dirt. I did subsequently buy and move in some mobile homes and filled up most of those vacancies. That basically obviously expanded the supply of affordable housing there and also expanded my cash flow. But initially, yeah, it was 44 paying tenants, and I did not own any of the mobile homes at acquisition.
Okay, and can you talk a little bit about your customer demographics, about what sort of people live in these mobile homes?
Yeah, so typically these folks, I guess, are probably earning about $35,000 a year household income. Okay. So that's obviously, one plus, 1.5 people on average working. These are the folks that, drive the UPS trucks and the Amazon trucks that deliver your packages. These are the people that wait on you when you go into a restaurant or maybe manage the restaurant. Some of these are small business owners. They might run a hair salon or a nail salon, something like that. And some of them are retirees. But again, the average household income is right around in the $30,000 to $35,000 a year range. So we're really their only path towards affordable home. Really, their only path to home ownership. They're not likely to be able to afford a site-built house, but again, we can get them into a house that they can afford and own it usually in less than 5 years.
Okay, and is it possible to take a mobile home from one park to another park?
It is, but that's rare. So to call these mobile homes is a bit of a misnomer. These, just to be clear, these are not RVs. A mobile home has no engine in it. It can't easily be driven off. You need to have actually a special toter, basically like the front end of a semi-tractor trailer truck. So they tend not to move. So that means the economics are generally quite good for landlords because, again, folks don't move the homes. So if they need to move, they'll sell the home in place. Obviously, somebody new will buy it, and they'll begin paying the lot rent. So really, as long as the mobile home has economic viability, somebody is going to want to live there. Somebody's going to pay rent on it. So in our world, we really view the tenant as being the mobile home, not the person. The person, people may come and go, still not as frequently as happens with, say, apartment dwellers. But really that home, again, as long as it's economically viable, we estimate that's 50 years, then that home, that quote unquote tenant, stays in the park and somebody is paying rent on it, again, for upwards of 50 years.
Okay, and so what you're saying is the time span for that mobile park home is 50 years, but does it matter, if the tenants, usually what is the time span for these tenants who live in these homes?
I think most tenants probably stick around 7 years, maybe 10. Okay. And again, they may leave, but they sell the house to someone else and someone else comes in and keeps paying the rent. Okay,
and what's the average size of these home parks?
Yeah, nobody knows for certain what the average size is, but best guess is maybe 35 to 40 pads is probably a good guess of the average size. I own some as small as 20 and some as large as about 300 pads.
Oh, okay. Got it. And how do you get to know about these deals? Because I assume you're not, there are no more number of mobile parks which are being created.
That's correct. A lot of deals are brokered, so you need to know who the brokers are. We also do some outreach to park owners directly and obviously, ask them if they're interested in selling and to keep our name and number if not. until the time is right. Sometimes we see these things listed on websites. There's no single way to build your deal flow, so we tend to have several irons in the fire, as it were.
Okay, and so I believe Warren Buffett has also invested in a mobile park manufacturing company, if I'm not wrong, and
yes.
there's a company called Equity Lifestyle Properties, which works in a very similar way, like Warren Buffett. So are there a lot of other? Is it a very competitive niche? Which I don't. It doesn't look like a very competitive niche, but there are some very high quality hedge funds and private equity investors in this.
There are. Those guys tend to buy larger, sexier properties. I believe one of those guys, either Carlyle or BlackRock, just paid something like $150 million for like a 700 pad park down in San Jose, California, the heart of Silicon Valley. It's hard to see how those numbers make sense. That's almost a whole different world than what I do. I tend to buy properties that are maybe $2 to $3 million in purchase price. And so that kind of flies below the radar screen of big acquirers like Equity Lifestyle and some of the large Wall Street firms. I'm very small, but small can be beautiful.
Awesome, right? And you took your time to build your own. You ran these mobile home parks, and then you launched your fund. Can you talk about how do you value a mobile home park, and what is your advice on that?
Yeah. So we tend to look at cap rates. There can be other extenuating factors that would increase or decrease a value as well. But ideally, we'd like to buy at around a 10 cap, so about 10 times earnings. But you do need to do a range of diligence and look into, for instance, the infrastructure. How good are the roads? How good are the pipes? What's the overall economy like, and what is, to the extent you can predict the future, what is the economic future for that town, for that metro area. But ultimately, we're cash flow investors, so we like to see properties that already generate cash flow and that are likely to do better. And as I mentioned earlier with my first deal, we continue to infill parks and make money on those houses, and also, of course, expand the supply of affordable housing. So if there is upside available, like being able to infill vacancies, that can be a good thing. We're happy to work, as it were, and actually improve some of the properties for ourselves and also for our tenants.
Okay. And, I want to know about what kind of returns an investor can get if they're investing into mobile park investing.
Yeah, it varies widely. The way I do it, which is buying mostly parks in the Midwest, where real estate is maybe not quite cheap, but it's at least less expensive than on the coasts. I'm typically able to generate kind of anywhere between 8 and 10% cash returns for investors, at least after, say, a year of improving a property. And then appreciation when the time comes to sell a property, then hopefully, no guarantees, but hopefully there's profit split at the back end. So tough to predict, but generally investors are earning 13 to 15% a year with me. That's a combination of cash paid out quarterly and then some long-term lumpy payouts of larger dollars, again, when a property is sold.
Okay. And do you think, is it possible for people to do it alone by, like how you did investing into property?
It is. There are a fair number of moving parts, no pun intended, to mobile home park investing. So you do need to get educated about it. This is maybe a bit more complex than, say, buying a single family house. But certainly there are individual investors. There are also funds such as mine at Park Avenue Partners. And then there are, again, some large publicly traded REITs. So there are a range of owner operators to different profiles.
Okay, and so I want to talk about the Park Street Partners. How do they come with that, and what kind of investment opportunities that people can have?
Yeah. So that's the wrong name. It's Park Avenue Partners is the new fund.
Okay.
Park Avenue Partners, and so we're doing. This is going to be my third fund that I've just launched, and we are actively raising money. And again, are hopefully in another 3 months or so, we'll begin making acquisitions once we raise some capital. But we tend, we tend to buy parks in the Midwest. We generally like all ages parks. We tend to buy them with some vacancy, and again, infill with newer used homes and expand affordable housing. Folks get, obviously a very concentrated investment in mobile home parks, but they do get the diversity of buying parks with me, really nationwide. So that's typically what I do.
So let's quickly do the top three. What's your favorite business book?
I really like Snowball. It's I think the best biography on Warren Buffett. It covers, of course, value investing, but also talks about his personal life and, frankly, some of the trade-offs that he made for being as successful as he is in business. So I really like that book.
Got it. And, if you could go back in time when you started working on a mobile park investing business, what is the one thing you would have focused on?
Probably the biggest mistake I made was that I viewed myself initially as an individual investor rather than as a money manager. Again, I've now raised, probably a little over $20 million from investors, and of course borrowed about 35 and bought about 55 million worth of properties total. But it took me several years to really broaden my thinking beyond just investing for myself, and really realizing I needed to raise outside capital and do it on a larger scale.
Okay. And what's your favorite online tools? Example, Gmail, Slack, Streak?
We use a range of online tools. Dropbox is huge for us. We do manage properties nationwide, and I can't be everywhere at once. So Dropbox for uploading videos is a big thing. We have our managers upload photos and videos. We do use Slack as well. Yes. Those are a couple of key ones. We also make certainly good use of our managers' video cameras on their phones. Again, we'll just have them go through the property, and we can say, hey, go over to house number 23. I want to see the side of the house. Did the junk get cleaned up? So again, just technology helps us many ways to better manage our properties.
Okay. Can you talk to listeners about, what is the best way people can reach out to you and get to invest into your fund?
Certainly. So the website is parkavenuepartners.com. So they'll find out all about me there, the fund. We've got some webinars recorded. There's just a range of information there. parkavenuepartners.com.
All right. And can non-accredited investors also invest into your fund?
I wish they could. Unfortunately, the SEC says they can't. So this is a 506 Reg C fund. So the SEC says that in exchange for me, for instance, being able to come on your podcast and market widely what I do, I cannot take money from the proverbial widows and orphans. So they've come up with the definition of accredited investors, and indeed everybody needs to be accredited in my funds, unless they would bring a deal. If an investor finds their own deal, their own mobile home park deal, then we can effectively partner. They could invest in that deal that they found with us. We could run it. Then they're not technically investing in our fund. Again, they'd invest in the deal alongside our fund. Or we could pay them a referral fee. We're open to win-win transactions, but as a general rule, yes, folks need to be accredited.
Sure, we'll put this on the show notes. Thank you very much for coming on to the show. I really appreciate it. I understand you're busy, but thank you for taking our time and speaking to this.
Rohit, thank you so much for being with me, and all the best to you. Happy New Year.
Thanks for listening to the Life Self-Mastery Podcast, where we teach you how to start and grow your online business. For more information, visit Rohit's blog at www.lifeselfmastery.com.